Welcome, everyone. We're going to go ahead and get started here for the sake of your time today. So welcome again. I want to thank you all for joining us today. This webinar is brought to you by SCS Global Services, and we are going to be covering GHG Inventory Verification and some of the various new regulations in the space, as well as taking your questions at the end. On that note, just before we get started, a few housekeeping points on this webinar platform. Everyone who has joined will be in listen-only mode. However, we invite you to post your questions in the question box feature, and we will be answering them during the Q&A portion at the conclusion of the webinar. Also, as a note, this presentation will be recorded, and you will receive a link to the recording hopefully sometime tomorrow. So with that, we will go ahead and get started. My name is Pamela Crawford. I am the Program Manager for the GHG Inventory Verification Program here at SCS Global Services, and I will be your host today. I am also joined by Danielle Stapleton, our ESG Program Manager, and then Dr. Melody Chang-Glasser, our Lead Verification Scientist within our program. Many of you may not know SCS Global Services, but we have just in this past year celebrated our 40th anniversary. And during this time, we have completed over 30,000 certifications in 125 different countries. We have over 15,000 clients and have auditors in every major market. Beyond SCS Global, we have, which is our certification, verification, and auditing body. We also have a broader institutional network that is composed of SCS Standards, SCS Consulting, a separate entity for consulting services, as we are a verification body, we do not consult. And then we have also launched the Global Heat Reduction Initiative, which is focused on expanding past the traditional emissions accounting to reduce short-lived climate pollutants that tend to have a larger impact on global heat. So if you have any questions on other services within our network, we will be happy to connect you with the right team. A little bit about our reach. As noted, we are active all over the world and work in every major industry. In this particular case for today's webinar, we know that everyone is branching over all industries, and GHG accounting affects us all. So with that, we will get into our topic at hand, which is GHG Inventory Verification. For the sake of time today and to leave plenty of time for your questions later on, I will briefly discuss some of the regulatory aspects of verification, what the verification process looks like, touch on levels of assurance, and then finally discuss timing in relation to our process, as well as the various schemes you might be reporting to in the regulatory or voluntary space. So what is driving inventory verification? As I'm sure many of you are aware and here to discuss today, the big one being California Senate Bill 253, also known as the Climate Corporate Data Accountability Act. This legislation applies to both public and private companies with a total revenue greater than $1 billion that are doing business in California. This legislation requires independent third-party verification. It will also be utilizing the GHG protocol as a criteria. And then just as a note, the California Air Resource Board, also known as CARB, who is the governing body for this regulatory aspect, has until July 1st of this year to publish their official disclosure requirements. So we are still waiting on those. However, as for timing, the reporting period is set to open in 2026, and that is going to be under a limited level of assurance. So this will be your 2025 data. Eventually, it will be graduating to a reasonable level of assurance, which we can discuss, I'll get into later. Also, as a note here, Scope 3 will begin in 2027, again, under that limited assurance. Another major driver outside of the US is the EU's Corporate Sustainability Reporting Directive, or CSRD, which applies to a broad range of both EU and non-EU companies. Reporting begins in 2026, like California, with that 2025 data, and initially is requiring limited assurance for scope 1, 2, and 3 emissions, with planned transitions into reasonable assurance over time as well. Unlike SB 253, CSRD extends beyond GHG emissions, encompassing a company's full sustainability impact by assuring additional environmental, social, and governance metrics, so your broader ESG reports. All right, and then I will make a note here, and although the SEC's climate disclosure rule is currently on pause and will likely remain on pause, eventually it may come into play down the road, so it's important to be aware of as another regulatory measure that will require verified reporting of scope 1, 2, and 3 emissions. So that really brings us to the verification process. And we're really going to focus on today. For the sake of time, our role really begins after you have finalized your inventory and your GHG assertion numbers. So this is likely going to include your data collection, your criteria and risk assessments, and then your inventory management plan. And so now you are preparing to submit to a regulatory or voluntary reporting body, or maybe you are just seeking verification in order to enhance your confidence in reporting for your internal and external stakeholders. So we'll really focus on this middle portion and get a little bit more into our process. Each verification begins with a pre-engagement stage. This is where we really focus on defining what the project will look like. What are your organizational boundaries? What is the scope of this project? Also during this stage, we assess our internal timelines as well as confirm that there is no conflict of interest between the client and our verifying team. Once our contracts are in place, our audit team will start planning the verification. This entails a kickoff meeting, any initial data requests to the client, and performing a high-level overview of the initial inventory for a risk assessment where we can start to identify those key areas that have the highest potential for error within your inventory. Once we complete our verification plan, we proceed to our verification activities, where we perform all of our evidence gathering tasks, as well as recalculating a sample of your inventory. Also in this stage, any findings would be reported back to the client so that any errors or discrepancies had the chance to go through those necessary corrective actions and then be resubmitted for final approval. Once findings are closed, we move into the fourth stage where our process will be drafted into a detailed report and statement, and then it moves into the final stage of independent review. Independent review is a critical stage for us for ISO requirements, and during this process, another team member that has not been involved in any of the previous stages of verification will determine whether the project has been conducted according to the objectives of the verification process and if the results are deemed to be correct. Following all of these stages, then we are able to issue the verification report. So one consideration for verification is this level of assurance, which I briefly mentioned earlier, as some of the regulatory bodies are requiring different levels of assurance at different stages. At a base level, this really determines the level of rigor and the type of conclusion at the outcome of the verification process. It's typically broken down into these two categories, as you can see, limited and reasonable. Limited is going to be less rigorous, slightly less costly. However, it still offers a high level of value. Essentially, limited is assuming the elements of control within your system are reliable, whereas reasonable is going to involve more testing of the control system in place. Reasonable can also involve a redesign of our evidence gathering activities as new information is obtained. We really typically find that many of our clients begin with a limited level of assurance, and as their inventories and data collection methodologies evolve over time, they may move into a reasonable level of assurance, which this is also aligned with the current regulatory plans. So that brings us to finally timing, everyone's favorite question. Timing, really, besides data quality, is the most important consideration as you are planning your inventory reporting. Typically, the verification process alone takes a minimum of 8 weeks. This is also, a perfect system where the client is prepared with their data and all other processes move according to plan. As you can see here, there are factors that can influence timing and the ultimate cost of the verification that are not within your control. For example, size and complexity of the inventory. You might be an organization with just a handful of offices, or you might have thousands of reporting units across the world. As for aspects within your control that can assist us in expediting the process, having an understanding of your methodology, being transparent with your inventory data, and then also providing access to any supporting evidence, such as knowledgeable staff or primary data records. This is really key for the final aspect that will affect timing, which is the number of findings uncovered during verification activities and how quickly the client and the audit team can resolve and re-verify those results. As a note here, some standards, mostly regulatory, specifically speaking to CARB MRR, and then as well as TCR, can involve other aspects such as on-site verification, which can extend its verification timeline as well. The main message, however, for all standards is not to wait, reserve your verification, develop a relationship with a verification body early so that you can be ready to go with your data on day one. And then as you can see here, just some deadlines for some of the common reporting bodies that we work with. So rounding out, and as we've touched on some already, there are many benefits that third-party verification provides, such as reporting to your internal and external stakeholders with confidence, improving ESG ratings or your CDP scores, as well as meeting potential supply chain requirements, and then of course, being prepared for the future disclosure requirements. And then just really quickly here, I want to highlight a few additional services that SES Global provides related to GHG inventory verification, that being ESG assurance, which is sustainability report assurance, so expanding beyond emissions into other aspects of your corporate reporting, such as water, waste, social, and governance metrics, and then also the Global Heat Reduction Initiative, which I briefly mentioned earlier, as a plus up to your traditional inventory and accounting measures. So here we are really measuring all those climate drivers, especially including super pollutants such as methane, black carbon, and other heat-related emissions. But with that, I will open up our Q&A portion of the webinar, and we can get started here on what we have. So let me transition over. We've got a question here. How much more time does it take to do a reasonable assurance versus a limited assurance? I think that is a great question. Kind of back to timing, it's really dependent on each inventory. I like to say that it, sometimes takes 1.5 amounts of the time, so we're adding a little bit, but it really depends. I don't know, Melody, if you want to jump in and add anything, a little more insight to kind of the level of rigor and what happens in a reasonable level of assurance versus the limited.
Yeah, I can talk about that a little bit. So we do give the same standard 8-week timeline, regardless of the level of assurance. However, it really does depend on the readiness of the data, right? So because of the reasonable assurance, there may be more delays if there are more findings issued during the audit process. And so I think typically we start out with the allocation that we can complete within an 8-week timeline, but sometimes those deadlines get pushed depending on what the data is like.
Yeah, I think that's a great point. Our 8-week timeline is fitted for both reasonable and limited levels of assurance. So it's really just dependent. And then obviously, like I mentioned, that everything can be expedited potentially with, good back and forth with our audit team. We've got a question here. Does reasonable level of assurance often require site visit or not necessarily? Here we would refer to not necessarily. This is where the ISO standard 14064-3 comes into play. And with that, if any, as we are doing our evidence gather and our sampling, if anything major highlights within your inventory, that does give us the ability to discuss a site visit. But generally speaking, most of our projects underneath GHG protocol typically can fall into that desk review, and we can resolve any major issues without a site visit. Oh my goodness. Will CSRD require GHG verification? That's a great question. Danielle, would you like to take that on as our ESG Assurance Program Manager? Can't hear you, Danielle, but that's all right. I will take that on then. There is an aspect of a GHG verification within CSRD. All of the framework for that is being outlined, but we can definitely follow up. We'll have Danielle follow up on that at a later date with you. What is the average cost of a verification of a forestry project? I can't speak to forestry projects, but we can get back to you on validation and verification for that. But I will mention kind of project cost for GHG verification, again, are really dependent on the inventory. Unfortunately, we can't really give like a broad scheme at all because every inventory is special. You know that, we know that, so it really is just dependent, but that's during our pre-engagement stage is when our operations team can really get with you to understand your inventory so we can give you an accurate estimation and scope for what it would take for our audit team to complete the verification. Is an inventory management plan required to conduct verification and insurance? Would you like to take that, Melody?
Yeah, so that is one of the requirements of from the GHG protocol, that the methodologies and assumptions made in your inventory be clearly documented. So we typically refer to that as the inventory management plan. So yes, we ask for that when we start the verification.
Perfect. Right. This question, what is the right moment to start the verification project process of an inventory? I would say the earlier the better. If you know that you are going to be seeking verification, you know, establishing a relationship with SCS Global so that you can get on our schedule is really important as early as you can. However, we don't start projects until the data is completed and ready to go. So once your sustainability team has finalized the inventory, then we would proceed with the kickoff. Does SCS Global provide service level and product level emissions verification? We do, and we would be happy to connect you with the right program. What are the VB accreditation requirements for SB 253? That is still being finalized by CARB. To the best of my knowledge, we work closely with CARB in the mandatory reporting rules phase, so we already have a close relationship with them. So we anticipate any additional accreditation requirements. We would absolutely meet those. We are an A and a B or ANSI accredited verification body already. So we have been working in this space for a long time underneath accreditation. Who is affected by SB 253? Again, that is any public or private company with over $1 billion in revenue operating in California. I would refer to the legislation for what exactly doing business in California will mean. Also, we are hoping that CARB will get more specific on that as they finalize their disclosure requirement. Will verification be required annually, yes, that is likely that it will be required annually. Most of our current clients who are in the voluntary space already, either reporting to CDP, do it on an annual basis so that they can verify and keep track of their emissions and their reductions over time. Question here, what if I don't have my scope 3 inventory? Do you have to have that for CDP or SB 253? Right now, scope 3 is not required by CDP. I do believe it improves your score if you can verify at least one category. And then for SB 253, that will be not required in the first iterations of the regulation, but will be required eventually. We find that most of our clients are working through their scope 3 and having that verified in preparation for the impending regulation of scope 3 as well. All right, is there a platform for publishing verified inventories? I believe that is also part of CARB's decisions that they'll be making in July of this year. If that's specific to the California regulation, they are working on softwares and a platform for submission. So we should have more information on that at some point. Let's see, SES has verified our base year inventory in the past. We have identified errors in scope 1 and 2 in the base year and may need to re-verify. Do you offer a re-verification service as a portion of the inventory, or would we need to go through an entirely new verification process? That's a great question. I'll briefly touch on that, and then I'll let Melody touch on it as well. We often encompass re-verifying a base year within our year project. So we will have clients that come to us with their 2024 emissions year, but they have had an acquisition potentially in the last year. So their inventory has changed. So per GHG protocol, it can be important to re-baseline. So we do factor that in, and we are able to help clients with that verification as well. And when we combine it with the rest of their verification, it does expedite that time. But Melody, if you want to add to that, maybe with some of the technicalities of rebaselining.
Yeah, so with rebaselining, we typically see clients rebaseline in the case of divestitures, or if they enter or if they have something that triggers their baseline recalculation policy. So it's important to note that in the GHG protocol, it's required to have a baseline recalculation policy similar to the inventory management plan. And so when SES is performing a verification and we see an error that may impact the baseline, we will tell that to clients and ask them to see if that triggers their baseline recalculation policy. And then once we have clients request to re-verify their base year, we typically treat that to be similar to a new audit where we go through the same rigor of sampling invoices according to the type of assurance.
Perfect, thank you, Melody. All right. What type of information is required in a claim to perform verification for the purchase and reporting of environmental attribute credits, so EACs? And then does this depend on the reporting framework? Melody, I will let you take that one if you don't mind.
Yeah, absolutely. So with environmental attribute credits or RECs, typically what we would like to see is record of the contractual agreements and that the EACs and RECs have actually been retired in the year. So different schemes such as Green E can provide different type of records, and sometimes we will read in the contracts with clients that it says that these EACs or RECs will be retired when they are purchased. So that kind of evidence, it does depend on the source that you get the recs, but typically across audits, we're looking for the same kind of information about how those are retired and purchased.
Awesome. Let's see. Oh, back to rebaselining. Does rebaselining come with additional costs? It does come with an additional cost because it takes our audit team time to look through that data as well. But when we pair it with additional years, it can bring the cost down somewhat, but obviously that is dependent on each inventory. And then we've got a question here. Are there any tools or software that you would recommend for managing inventories and calculating scope emissions? Although we can't recommend anything per se, since we are, a verification body and we like to remain independent, I will say we have clients utilize various different platforms. Workiva is a big one. Melody, do you have any others off the top of your head that are very helpful?
We see clients work with a company called Watershed and also Resource Advisor. So we can, and there are also companies that prepare their documents internally with Excel spreadsheets. So we do see a lot of diversity when it comes to the type of inventories that are submitted to us, and all of the solutions have their different pros and cons for sure.
Yeah, for sure. Okay, and I'll just take two more here as we wrap this up and get you back to your day. Does verification pertain only to GHG emissions, or does it also examine input data and its quality and detail? And does it include recommendations for improving data quality? So first off, it depends on the level of assurance for how the rigor that we would analyze the input data and the quality, but no, it does not include recommendations for improving. The way that we issue findings is through in non-conformance. So you are not in conformance with the GHG protocol, and we would highlight the aspect of the standard that is not in conformance, and then it would be up to you and your team to fix that. Melody, do you want to expand on that at all? I know you are our findings pro here.
Sorry, could you repeat the question? I was reading
Sure.
through some of these other comments to try and organize them.
They were asking a question about findings and then the level of rigor for input data, and if we can include recommendations on improving data quality.
So we do often sample input data. So basically we want to triangulate data in audits. So that is you have maybe invoices that can support that the value in your spreadsheet or the value in your internal database matches what was actually received by the site. So we will ask for input data. Sometimes we ask for transaction records on fuel purchases if those end up being a large portion of the inventory, and definitely sampling electricity invoices as well. So that triangulation of input data is important. In terms on recommendations for improving data quality, so my kind of approach to this is we are like the third-party independent auditing, so we can tell you what the error is and we can't really clarify how to fix it because that would be consulting. Sometimes if there are formula errors that do not hit materiality, I will note them as an observation and say there is probably a formula error in this cell and this could cause something like a materiality problem in the future. So I will note things that are detrimental to the inventory, but as far as giving advice on organizing data and how to present that, I can't give advice on that.
Yeah, that's a great point there. Right, another question here. Can you verify progress toward GHG reduction goals? Absolutely. We work with many of our clients are working towards SPTIs. So we help them with initial verification of the progress towards their goals. And then a final kind of question here. Will the presentation be shared with the participants? Absolutely. We will be sharing this after the fact. So we'll kind of wrap it up there. It doesn't look like there are too many lingering questions. So I want to thank everyone for joining us today. Again, for any questions we did not get to, we will get back to you following up later this week. And then just as a note, I'd like to note that our team will be at Green Biz in February. So if you and your team will also be there, please reach out. We would love to connect in person. But thank you all again for joining us today and your wonderful questions. If you have any other, please follow up with us. I hope you have a wonderful rest of your week.